Hey, how's it going? So this is a trade review for June 11th, 2026. And let me, I'll keep it on for right now. This indicator. I'm gonna go to the 3-day chart. Oh wait, no, this is the 3-week chart actually. Okay, on the 3-week chart, we have this fair value gap right here. This BC, and as you can see, we were riding into all-time highs very aggressively. We created this fair value gap, and then went down these past 3 weeks. Reaching into there last week, it closed. These are weekly candles. Last week it dove down deep as well. 3-day chart, went up, created this wick, closed back down here, and one sec. Okay, and so this is that same 3-week fair value gap with quadrants outlined on it. So upper quadrant right here, 25%. We reached it on the daily chart, or we reached it on every time frame, but on the daily chart, notably. Let's go to the 7-hour time frame. Actually, no, that messes it up. That messes up the replay trading. Okay. So right here, this was the open. This line represents the open and close of yesterday, and then this line right here is the open. So all of this was. Oh wait, no, that's 2 days. Never mind. All of this was 1 day's price action right here. We went up and swept this high, taking out any trail stops. So any short sellers in here, or any short sellers rather above, just anywhere in here, engineered this liquidity, went up and swept it right here. So they moved their sell stops right to here, got taken out, and then they ran it in the direction into sell side. They ran it to sell side. And then on the 30-minute chart, this whole run happened at 9:30. Right. So in the 15-minute, I'm reviewing two trades. One was a swing trade, and one was just my normal model. So 9:30 occurred right here on Tuesday. Went down very aggressively, and at 12:30 during lunch hour, we created the low of the day. Now, I speculated yesterday that this would be the low of the week, and that we wouldn't tamper with this low at all because we had gone down for a very long time, and it occurred on Tuesday, which if you don't know daily profiles, Tuesday has a 70% likelihood of creating the higher or low of the week in certain price conditions, and this price condition in the daily chart fits those parameters. So I anticipated that this would be the low of the week, and this fair value gap is what would cause propulsion. If we went even down into here after rising up over here, this fair value gap would be the causation of why we would go up after hitting it before sweeping this low. So this is the last line of defense, I thought. And if we hit it, I wanted to take a long off of it, which we did end up hitting it. And now here's that low again, make it more clear. Here's that low. Obviously, we didn't sweep it, right? However, that 1 minute fair value gap, 1 minute IFEG over there, wasn't the fair value gap that price utilized. Obviously, it was something down in here, which might have been like, I don't even know, something in here. I didn't really investigate it at all, though I should have when I was in the trade. But I entered for a long position right around here, right around the open, because top step doesn't allow me to have trades for more than 1 day at a time. And I just targeted this high right here. I would have taken partials throughout it. Well, actually, I couldn't have. Maybe I would have exited right here or something. But this high was my target. I don't think this low was going to be swept. And you can also see how aggressively we created the low right here. Very aggressive, which shows that smart money really wants to see all the longs and shorts positions that were in here being trapped. That's why this is a BPR right here. So now they're trapped in those positions. So entered for this trade right here. Obviously it didn't pan out. However, the low remained unswept. My stop loss was in an improper state because if we go over here, this is the SIBI, right? We have candle 1, candle 2, which is the formation of the SIBI, and candle 3, which verifies that. However, if I'm using a SIBI as an inversion fair value gap, so now it's acting as a BISI, I have to use candle 3's low. So right here, this is candle 3 and the low of candle 3. And that should be my stop loss placement. And if price is to wick outside of it or mohawk outside of that at all, then it cannot go beyond candle 3. And if it does, then it's not a mohawk. It can't even wick outside of candle 3. So my stop loss should have been right there. However, I didn't want to incur that much risk. It should have been right here, and it would have been safe, and it would have gone up. And I don't know if where I would have exited on here, or if I would have exited yet, because it still hasn't hit take profit. But right here is I went to bed around. Oh wait, no. What? I must have gone to bed like around here, like 12:30 a.m. Eastern time, because I'm on Pacific Coast. So that would have been like plus $700, $800. But I had wrong stop loss placement, and had I moved it to here, it would have been minus $400. So I kept it like right around here, minus $200, 270 rather, and that was indicative that I was over leveraging because I couldn't have proper stop loss placement. However, I was only in for one micro contract. I wanted to add more, but well, I didn't care if I had more or not. I just wanted to have the least amount of risk possible. So in reality, I should have waited for more confirmation, or like as we created the low, bought in some sell stops. So once we reinverted this fair value gap up to here, wait for the formation of some sell stops, and then long off there, which I don't really see any particular one right here, I guess. That was after I went to sleep. And say that was minus 270, and I don't know if I'm undecided whether I should or should not be swing trading on my Top Step account. I'm not fully sure. So here was the entries for that. Here, I guess I exited pretty quickly there because I realized, oh wait, Top Step will automatically close my position in 7 minutes. So here's my long, stopped out right here, this candle. Very close, just swept that low, and then it went up, but whatever. Then this morning's trade is what I'm going to go through now. So I did my routine analysis. I figured that bias would likely be up, more up than down at least. And I saw these very clean relative equal highs. And these were a very clear target for me. So if you go to the 15-minute time frame and you look at trailed stops from this point, because I don't believe this low is going to be swept, or at least not this low right here. Right, so trailed stops from there on the 15-minute chart. Got this, and this. Let me turn off sessions so you can see that better. There you go, right there. And then of course we have this 3-week fair value gap, this big gray box, and also this one, which is a bit more specific, but I don't really need that. So right here, closed at, looks like about, I couldn't reach upper quadrant really. It looks like a few ticks off. Upper quadrant's like right here or something. A little bit below there. The bodies couldn't reach upper quadrant, indicating bullishness. So this was that 15-minute low right here. We swept those trailed stops, 15-minute trailed stops. And then going to the 1-minute time frame, I'm going to turn this indicator back on. I believe this low was the protected low for before my target, until my target gets hit, those relative equal highs. So I was banking that if we sweep this out at all, I'm wrong for the day and I'm going to do something else. Well, actually, no. If we sweep it out, I'll allow for one reentry in case of a Judas swing. But if I'm stopped out a second time, then that's it. That's why I allow myself. That's one reason why I allow myself 2 trades. And then, so target is up here. This low is protected, so I'm going to look for an entry within this area. Then I go 15-second time frame, go to these trailed stops right here. These are very obvious, very clear. I mark these out. And underneath that is this 1-minute IFEG. And I will utilize that. I would anticipate the price will go down if it's very reactive. It will go down, sweep this low out, utilize consequent encroachment of this fair value gap, and then rally higher. Or just somewhere in this fair value gap. So before market opened, I set a limit order right here with my stop loss at this protected low right here actually. And my take profit up here at these relative equal highs, about a 1 to 3 RR, almost exactly. And I also used this because I considered that the wick might be utilized before price, or might be utilized by, like, if this is disrespected, then the wick is like the last line of defense before before the protected low is taken. So at opening bout, this thing is glitched. Hold up. I'm just not going to use replay. So there was the trade. Right here, it went down, entered me. It didn't. We had a little bit of time delineation from, like, just in this little portion of time. So from, looks like 9:32 a.m. up until 9:40 a.m. 8 minutes of time delineation, which is why we did not respect this gap very well. We still respected the wick consequent encroachment, and as I was doing the trade, I saw that we created SMT lows here with ES. And then shortly thereafter, it rallied up to take profit. I think I risked around $300 or $200 on this trade, 250, something like that. So my original take profit was 800. However, I took one partial right here, and I was in for 2 micro contracts. So here's the entries right here, one partial right here. No, actually it was right here. One partial at this red line, and I forgot to go over that. So over here for RTH trading, we are opening up clearly higher. We had this to go take out, New York PM high, so avoiding all ETH, even though it swept right there. We still had that to go and take out, which we did right there, so that was my target, just slightly above this high right here. And I exited my second position. I didn't wait for my full take profit to be hit, and maybe I should have, or maybe I should have choked my stop loss, like at consequent encroachment of this fair value gap or something. but let's see, I exited right at 870 and a half. Just about right here. And my partial was right here. So overall P&L today was plus 280. And this is what the trades were like. So that this was a swing trade. And I only took one trade this morning. Even though Top Step still counts it as two trades because I took partials. So that's why I don't really trust when it like the statistics it gives up here. Win rate is 40%. Well, that's like counting partials, and it's like also counting break-even trades. Like if I get stopped out for -$1, that's a losing trade. So, and then most of this stuff I don't trust. And this isn't accurate. I mean, this is completely not accurate because most of my trades are only a few seconds long. Like 1 to 5 minutes, 1 to 2 minutes usually. But because I took this trade, which was 10 to 30 minutes long, it heavily skewed this. But I guess I don't have enough samples yet. I don't have that many days on here. A couple of weeks. All right. So that's all for today. Oh yeah. This was Trump trying to make some agreement with Iran. Alrighty. Later.